So as you may be aware of that in recent days, after the election of Trump, the price of Bitcoin have increased exponentially. So as you can see during this section of the price graph, and it have reached 100,000 US dollar for the first time in history. And I have seen more and more people, especially younger people, that are putting a lot of their savings into cryptocurrencies. I remember one time that my car is getting towed, and I was in the tow truck with the driver, and the driver is checking the price of Bitcoin constantly. And he told me that many of his friends almost put all their money into cryptocurrencies. So I think whenever you have a situation like this, where you put all your money into one basket, it's always not a very good thing. If you may be lucky, if you made a lot of money, but I will not be surprised that it would also be very risky, so you may lose a lot of money. And I think in the world of investment, my personal opinion is this. It is really not important and not necessary to run very fast. If you can work steadily and not fail over, I think that's the important part. Because investing is really a long-term business. And the power of investment is not how much return you can produce. It's the magic of compounding. So compounding is essentially interest on interest. So you would see something like this if you find a compound interest calculator online. So essentially the idea is when you have more and more principal, then although maybe each year is increasing at a rate of 7%, but 7% of 1 million is $70,000. But 7% of 100 million is $7 million. So when you get more and more principal, although you are earning the same return, you are able to grow your money much, much, much faster. So I think compounding is the magic of investment. That's how you can make money from investment. Although I think return, of course, is a good thing, but something like 50%, 80%, 100% return within a matter of weeks or months, I don't think it is sustainable. And if you are always trying to chase those kind of returns, I think it will be a very thrilling experience. But it is not a sustainable, not a very smart way to build your wealth. So wealth comes from accumulation, not from speculation. So I think this graph is really nice. So it is the gain required to make up for the loss. So in the previous section, I have discussed the concept of running fast is not important. But what do I mean by not fail over? So let's have a look at this diagram. So if you lose 10%, you need around 11% gain to make up a loss. And you can see this divergence occurring here. The most money you can lose is 100%. And if you lose 100% of all of your money, you will never be able to make up the loss. So this graph really approaches to infinity if the loss approaches to 100%. So even a 60-70% loss, which I guess is not really uncommon in the crypto market, means you need 150 to 200% return to make up for this loss. And this can be devastating in your investment experience. How many years do you have left? Even if you are 20 years old, you may only have around 60 years of life expectancy left. And if you are in middle age, you have less and less time for you to utilize the power of compounding. So start early is important. But the more important thing is to not fail over. If you really, at your 30s or 40s, lose 60%, 70% of your wealth on crypto because you are looking to gain 100 or 200% within a year, then it is almost impossible for you to recover this loss, and not alone to enjoy this later section of the compounding return, the magic of compounding. So once you fail over in your investment journey, to restart it is very, very, very hard, and even impossible if you don't have many years left in your investing journey. So that's something I really want to share with you. And don't be lured by this kind of high return. There's always another side of the story. For every high return you get, you are also indirectly, or you are not aware of, taking on a huge amount of risk. And another related topic is the relationship between price and return. So when a price of an asset goes up, generally speaking, the expected return will decrease. So I think a good way to understand price, current price, is basically all the future return you expected to get and convert it into a present value, which is converted into the meaning of money today. And if the price is getting higher and higher, then this means you are paying more and more for the same stuff. So imagine you have a mobile phone. And if you are paying more for this mobile phone today, then you benefit when you subtract cost becomes lower and lower. So I guess the same reasoning applies to investment as well. So the higher price you pay, if you calculate mathematically, the lower the return you are expected to get in the future. So if you pay $100,000 for a Bitcoin today, then your chance of making money becomes very slim compared to those who paid maybe $5 for Bitcoin many, many years before. So for stocks or real estate, it's okay to pay more because of this increase in earnings. So stocks price is supported by earnings, and the stock and price of real estate is supported by population growth. So if you look at a picture like this, so this is the price of SP 500 versus earnings per share, which is a measurement of earnings. You can see that during a long term of period of time, the price of SP 500 is highly correlated with earnings. There are some periods of divergence, but if you look at a long horizon, they tend to converge. So this is the fundamental of stock price. And that's why over the long term, they would expect stock price to increase. Because as companies become larger, they are earning more money. As population become larger, there's more money to be earned. So that's so I guess there's a support for the stock price. It is supported by the earnings or the underlying qualities of listed companies. And real estate, I think, is even more direct. People need house to live in. So whenever population increases, the price of real estate are expected to increase. So that's why if I give you two examples, the Australia housing market has done really well in the past 40 years. So usually is every 10 years you expect house price to double. And this is because Australia enjoyed a period of high population growth because of immigration. Whereas for Japan, over the past 30-40 years, in some cities, the real estate price is still below the peak reached in the 1989, so around this period. Because we know that Japan has a declining population. So population is really the support for real estate. It cannot go too low because there's like a hard demand for real estate. But what about cryptos? So what are the support for cryptos? So first, crypto is a non-productive asset. So if you own Bitcoins, it's not going to do anything. It's not going to generate dividend, not going to generate any income. So it's like gold. It's not productive. So because it's not productive, we can't have things like earnings, as in the case of stocks, to give a support, to give fundamental values for cryptos. And it is really not a necessity. You will not die if you don't have cryptos, but you will die if you cannot drink, don't have access to water. So how is the value of cryptos determined? It is purely determined by what others want to pay. If we go back to the price diagram, in 2023, people like to pay around 20,000 US dollars for one Bitcoin. Today, people want to pay $100,000 for a Bitcoin. In 2021, people want to pay $60,000 for Bitcoin. So this really is just, I think it's very random, the determination of price. It's what really the other buyers, especially the big buyers, want to pay. That determines the cryptos, as well as how many demand is there in the market, how many supplies is there in the market. But there's really not a support. If cryptos goes to zero, I'm not surprised, since it doesn't have any fundamental values to begin with. Even for a house, you need bricks, you need to have floorings, you need to have kitchen, bathrooms. And those things worth money. But for cryptos, I don't know if anything is worth anything. It's just a pure human imagination appeared in the internet. We don't even have a physical thing. It's just our imagination. If human civilization has been destroyed, then nobody will know that crypto ever existed. So I guess another key argument for people who are supportive of cryptocurrencies is that Bitcoin could be a currency of the future. And this means there will be a lot of demand for cryptocurrencies, and so the price will go up. But I think the success of Bitcoins is precisely the reason why it will fail. So what do I mean by this? Success, I mean the huge price increase, as well as the huge expected price increase. There are many experts, when Bitcoin price is 50,000, predicts it's going to hit 100K. Once it hits 100K, those same experts say it's going to become 200K or 1 million, 2 million, whatever. Just like this particular book. So in January the 1st, 1999, someone says the Dow Jones Industrial Index is going to reach 100,000. And you know what happens after 1999? The dot-com bubble crashed. So there will always be people who are saying those kind of things. So when the price of Bitcoin is rising, it's much easier to ride the boom and to expect price to increase rather than to say the price will decrease. Because usually the market can be wrong or can be irrational for a huge amount of time, maybe in the span of 10, 20, 30 years. And you never know when the price is going to crash. Since the price is currently rising, I think it's much easier to make money by betting the price will continue to rise. But you never know when the music would stop. And when the music stops, whoever still holds Bitcoin would face a lot of trouble. So why is the huge price increase of Bitcoin precisely the reason Bitcoin will fail? Well, if you think about currency, what do you want for currency? You want stability. So this is really, so currency is a store of value. You want a currency to be stable. You want the price of a liter of milk to be $1 today, $1 in the future, $1 in 20 years, $1 in 30 years. So that's what you desire for a currency. You don't want the price of currency to jump around. You want currency to be like this rather than like this. So if you expect the price of Bitcoin to increase 100% per year, then how can Bitcoin become a currency? So imagine if you use Bitcoin in your country, and today the milk price is $1, tomorrow 1 Bitcoin, tomorrow because Bitcoin increased by 100%, now it's 0.5 Bitcoins. And next day it's dropped by 20%, so it's like become a 0.7 Bitcoins. So that's going to create a lot of trouble. So for the Bitcoin to really become a currency, it needs to be stable. So it needs to be, the value of Bitcoin needs to be the same today or tomorrow, or very, very later change. So for a US dollar, it's depreciating at a very stable rate, around 2% per year. That's okay. That's still stable. But a 5-6% jump in one day, or 20-30% jump within 1 month, that's not stable. That's not suitable for a currency. So for Bitcoin to become a currency, people are expecting, you should be expecting that you cannot make money on currency, on the Bitcoin. In the same fashion that you are not expected to make a lot of money by holding the US dollar in cash. And another counter argument is that the government will not allow cryptos to become a currency. So even the supporter of cryptocurrency, Donald Trump, this threatened for BRIC nations, so that's basically the developing economies, including Russia, China, and India. So they threatened to put 100% tariff if those nations seek to replace the US dollar. So even Donald Trump knows that the reason why America can rule the world and have such a prosperous, powerful economy is because of the use of US dollar in international trade. So really US have a lot of privileges in this case because not only US dollar is used domestically, it is also used internationally. And it is the reserve currency for many, many, many countries. So if US decide to print more US dollar, some of the negative consequences are being borne by those countries that hold the US dollar as a reserve currency. But the benefit is usually enjoyed exclusively by the US citizens. So the US government is not really going or willing to replace US dollar with Bitcoin because this would undermine the national security, the national interest of the United States. And this is the same for any other country. the government can be the government because it has the ability to to collect tax. And if you replace everything with Bitcoin, how can government collect tax? Everyone will just earn income anonymously. So there's a very big trouble. Like even if we overcome the problem of this store of value concept, rather than something that can appreciate or depreciate by a huge amount, we still face the consequence of the innate want of countries to protect their own currency. Because the right to issue a currency is one of the biggest power of government. If you want to counterfeit currencies in any nation, it is a huge crime. And the reason is there's only one place that can issue national currency, which is the government. So government will try really hard to protect this power. So we know that there are perhaps a few hundred currencies in the world because there are a lot of countries in the world. But how many cryptocurrencies do we have? I have just looked it up on this website. So there are 17,709 different crypto assets in the world currently, and it's increasing every day. So how can you not conclude that this is not a bubble? If you have one or two cryptos, I think it's acceptable. But if you have 17,000 cryptos, which one is going to replace the US dollar? And why there are so many different crypto assets out there? And what's the reasoning? I think the reasoning is because people expect that other people to pay more money than what they have paid today, so they can make a quick profit. That's why they exist. All those reasons are just something that they reassure to themselves to make themselves more comfortable. I don't think there's really any other reason to explain why there are so many different cryptos other than it is a huge market bubble. And I have also looked at the trading volume of Bitcoin. So today the trading volume is 84 billion US dollar. And the market cap for Bitcoin, as you can see from here, is 2 trillion, which is 2,000 billion USD. So if you divide 84 by 2,000, you get 4.2%. So this is, I guess, a turnover rate of Bitcoin. So on average, each day, 4.2% of Bitcoin is traded on the market. So if you divide 100 by 4.2, you get 23.8 days. So this is the average holding time for Bitcoin. So on average, each people who hold Bitcoin holds it for about 23 days. So I guess that's another thing to be concerned about. If the price goes like this, and people are only holding Bitcoin for 20 days, they might buy it here, sell it here, and then the price increase, they buy it here, and then sell at the bottom again. So many people, in fact, despite the market is increasing overall, is still losing money because they are trading too frequently. So this is the problem with the financial market. Back in the day, the holding time for a stock in company is like 1 year or 2 years. But now it's getting close to 20 or 30 days as well. So people are trading too frequently. If you want to make money from Bitcoin, I suggest you to hold it 1 year, 2 years in a very long period of time, rather than buying or selling every 20 or 30 days. If you do that, even if the price is rising, you are unlikely to capture much of the gain. And if you really believe in Bitcoin, you should not trade every 20 days as well. If you really believe in its future, you should hold it until the future comes, rather than trying to time the market and do things like that. So the final thing that I found interesting, perhaps, is how Bitcoin is priced. If you look at here, the price of Bitcoin, Ethereum, whatever it is priced using US dollars. So even in the crypto market, for people who are supposedly believe in crypto, the price is still priced in terms of the fiat currencies, the US dollar. So I just found this really interesting. If in one time in the future that all the different crypto assets are priced using Bitcoins, then I think there's potentially a future for Bitcoin. But now it's all priced in the US dollars. But it just seems very funny to me that something that is supposed to replace the US dollar is priced in terms of the US dollar. So that's just some thought I have come up in recent days after witnessing such a huge price increase after the election. I hope this may be useful to you.